Good day Forex trader. Your USD Forex signal, relief pullback likely on profit taking. There is a likelihood that the pair will give back some of its last week's gains as investors target the support at 1.1365. Bearish view. Set a sell stop at 1.1450 and a take profit at 1.1365. Add a stop loss at 1.1550. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1460 and a take profit at 1.1525. Add a stop loss at 1.1400. The Euro-USD pair continued its bullish rally as the market reacted to the latest interest rate decision by the European Central Bank, ECB, and the strong American jobs data. It is trading at 1.1450, which is slightly below last week's high of 1.1485. The price is about 2.95% above the lowest level this year. ECB and jobs data. The Euro-USD made a strong comeback last week after the ECB delivered its decision. The main decision was in line with what we have expected from the bank. It left rates unchanged and continued with its asset purchases. The situation changed during Christine Lagarde's press conference. In it, she said that the bank will leave rates unchanged until the real interest rate remained above the target at 2%. Pressed about the issue, she refused to rule out a situation where the bank becomes more aggressive with rate hikes later this year. The view that the ECB will start hiking rates this year was supported by the recent economic numbers. Data published recently has shown that the economy is doing well. For example, the unemployment rate dropped to the lowest level on record. Further, GDP data showed that the economy managed to grow in the fourth quarter. The Euro-USD pair rally slowed after data by the American government showed that the labor market strengthened in the past 2 months. On Friday, the BLS upgraded its December jobs numbers to over 500,000. It also reported that the economy added over 467,000 jobs in January while the unemployment rate rose slightly to 4%. Meanwhile, the bond market is sending a message that the Fed will be able to hike interest rates without slowing growth. Real yields have risen sharply recently as investors expect that the growth will continue. Euro-USD forecast. The 4-hour chart shows that the Euro-USD pair rose to a high of 1.1482 last week. This was a notable level since it was the highest level in January this year. As a result, the pair moved above the 25-day and 50-day moving averages while the stochastic oscillator has moved to the overbought level. Other oscillators like the Relative Strength Index, RSI, and MACD have also continued rising. Therefore, there is a likelihood that the pair will give back some of its last week's gains as investors target the support at 1.1365. Gbp Usd Forex signal, consolidating above $1.3512. There is a general lack of direction in this currency pair. Today's Gbp Usd signals. Risk 0.75%. Trades must be taken between 8 a.m. and 5 p.m. London time today only. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3512, $1.3458 or $1.3401. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3552 or $1.3587. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote last Monday that the price was rising and looked likely to continue going up until it hit the nearby resistance level at $1.3441. I thought that the market could turn bullish on the USD again quickly, so I was prepared to take a short swing trade from a bearish reversal which may set up at $1.3441. If we got 2 consecutive hourly closes above $1.3441, especially within the first few hours after today's London Open, I thought it might be best to look for long scalp trades above $1.3441. I was correct about the price reaching $1.3441, both that it would be reached, and that we should wait for 2 consecutive hourly closes above that level before going long, as there were not 2 consecutive closes above that level during the London session, so this was a good rule to keep out of any losing long trades. Towards the end of last week, the Bank of England hikes its interest rate by 0.25% to a total rate of 0.5%, and although the hike was widely expected, it caused a bullish price spike of about 60 pips. However, the rate hike bounce did not last for long, and the pound has now given up all its post-hike gains. Frankly, this pair does not look like it is going to be exciting today. We will probably have a quiet Monday and little price movement in a directionless currency pair such as Gbp USD. If you are going to trade this currency pair, the best approach will probably be to expect the price to continue to consolidate between $1.3512 and either $1.3552 or $1.3587, likely an upper limit so effective resistance, but it will be advisable to take and monitor trades on short time frames due to the low volatility. Aud USD Forex signal, Aussie may drop below 0.700. The pair will likely continue falling as bears target the key support level at 0.6970. Bearish view. Sell the AUD USD and set a take profit at 0.6970. Add a stop loss at 0.7145. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7100 and a take profit at 0.7150. Add a stop loss at 0.7050. The AUD-USD pair attempted to crawl back on Monday morning as investors continued to focus on last Friday's stellar jobs numbers from the United States. The pair is trading at 0.7075 as focus shifts to the upcoming U.S. inflation data. Fed and RBA convergence. The AUD-USD pair declined sharply on Friday after the U.S. published strong jobs numbers. The data revealed that the American economy did well in January even as the unemployment rate rose. The economy added more than 467,000 jobs in January, which was better than what analysts were expecting. The number was also better, by far, than the estimate by ADP, which predicted that the economy lost more than 300,000 jobs. Most importantly, the BLS upgraded the number of jobs that the economy added in January. Focus now shifts to the American inflation numbers that come on Thursday. Economists expect that the data will show that the headline Consumer Price Index, CPI, rose to 7.3% while core CPI rose to 5.9%. If analysts are accurate, it means that the country's inflation will be the highest it has been in more than 40 years. Therefore, with the labor market being strong and inflation rising, the Fed will have the motivation to be more aggressive when it delivers its rate decision in March. The same trend is happening in Australia, where the Reserve Bank of Australia, RBA, delivered its decision last week. The bank decided to leave its interest rate unchanged at 0.1%. Most importantly, the bank decided to end its quantitative easing, QE. In a later speech, the bank's governor noted that it will likely increase interest rates if the data continue being supportive. Numbers have been relatively strong. Inflation has risen and the unemployment rate has fallen. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair declined sharply last Friday after the strong American jobs numbers. The pair is currently between the lower and middle lines of the Donchian channels, while the relative strength index, RSI, has tilted lower. Further, the pair is slightly below the low, the 25-day moving average, and a few pips above the standard pivot point. Therefore, on Monday, the pair will likely continue falling as bears target the key support level at 0.6970. On the flip side, a move above the key resistance at 0.7100 will invalidate the bearish view.